In this video, I want to go over a trade that I took today. It was over 200% return. And I want to talk about my entries, my exits, my stop loss, why I drew certain levels the way I did, the analysis, the execution. I would say this is probably top 3 or top 5 trades so far this year. The first thing we have to go over to gain context for the setups is the action on Tuesday, December 13th, 2022, when we had a very large rally on the CPI data inside of a 4148 and 3/4 supply zone. Very, very key macro level supply zone. A very good buddy of mine, he helps me in the Discord. He works on Wall Street. He's a prop trader in New York City. Made a video on this for Entrepreneurship members, and he absolutely killed this analysis, taking the market short off of this supply zone, and the market rejected very nicely off of this. Now on Tuesday, despite my analysis aligning with his, I took a very emotional trade where I did not take the market short off of supply like I would like to. Instead, I expected the market to bounce after we rejected supply, and I took a loss as the market was coming down. I reviewed this trade on my Instagram. If you're not following me on there, at Ameritrade, I'll post a link in the description below to do so. I review trades, post setups, go over daily trading tips and tricks, just stuff you're not going to find anywhere else on the internet will be on my Instagram. The link will be in the description below. You're missing out if you're not following it. But essentially, I took a loss in the morning trying to long the market, expecting more upside. And it sucks starting off the day like that with my analysis aligning with his, expecting more downside, and majority of retail traders are getting long, not expecting that we have an area of tough resistance from sellers in the past at 4148. This level was around 4134, I believe, on the December contracts. But now I'm on March, the market sold off, and I made my money back as that sell-off broke below a key level of support, targeting ranges prior to that CPI data, as that's where the market basically consolidated inside of this range right before the really strong move initiated up from that CPI data. You always want to find out where the move initiated, because that's going to give us a lot of information about participants in the auction. So this was Tuesday's setup. It was a losing trade to start off the day, and then I made it back with a winning trade on the sell-off. Then on Wednesday, we had the federal funds rate and we had Powell speaking. This was a day after the CPI data, and prior to the Fed's rate, the market was pretty flat. It was lacking volatility. Then we get the federal funds rate, we get Powell speaking, and the market has a very, very large aggressive sell-off to the downside. I didn't take any trades on Wednesday. I wasn't really so interested in any, just because of all of the games and the news and the uncertainty that was going to become about with Powell and with the Fed rate. But we did get a nice sell-off. You could have capitalized on some moves, but I always say this, and I've been saying it the past 2 weeks, that after these major announcements, it builds structure in the market and provides us proper levels to play the market off of with new information that gets developed. Now, Thursday, this was 2 days after CPI, a day after the Fed. The pre-market plan, I post these every single day in the Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. So sellers present in the market off of that analysis that I just mentioned. We rejected that key supply zone on Tuesday, sold off, and then sold off again, forming supply at 4071 off of the federal funds rate and Powell speaking. This 4071 level remained extremely important for me today, because if we remained below 4071 supply, bears have control in the long run. What I mean by this is, if we go to a daily chart, what you're going to see is at that supply zone at 4154, we have a very, very large upper wick on a daily chart. You tend to not see large upper wicks like this. And when you do see something like this, it indicates a possible reversal in the market, especially that volume was very, very high on 12/13, that day we sold off from that supply zone. So that was vital in my analysis, because if we reclaimed back above the supply zone that formed from the Fed meeting, then it was a very high chance that the market did not put in a high, and that if we got above 4071, bulls would have a chance to rally us back up, fill in that structure from that upper wick on the daily chart, and go back and test that supply zone that formed when we sold off of the CPI data. So with that in mind, the next scenario was a bearish one. The bearish scenario was below this 4071 supply. The market may put in a valid short-term high. Now we need to see the action in the auction as the market comes down. I want everybody to put yourself in the position or put yourself in the shoes of other participants. Understand where many are buying, when many are selling, and figure out the context and figure out other participants in the auction, what their next move will be. With everything that I'm explaining so far and sellers being present in the market, you want to see the market continue to go down, break below key support, break below key demand, indicating that a possible market sell-off and the possible high is going to be put in on the short term if we get structure to break on the downside, indicating continuation to the downside. So that's where my first scenario came into play. Price was currently trading around 3994 at the time of my pre-market plan. This was 2.5 hours before the market even opened up. This isn't hindsight trading. This isn't coming up with levels after they happen. This is watching levels and managing your risk and executing accordingly. I said, if we offer below 3981 to 3975 in the first hour today, I am open to playing the market short, targeting 3954, 3937 demand. I said this level is key as it's important structure in the market, which has bounced every time we've tested. If we break below 3954 and 3937, this damages the market, validates a short-term high, and we may see a sell-off sub 3900 on the March contracts. So now that we understand these levels a little bit, where 3954 came from was the balance range low that every single time we've tested 3954, which was 3919 on the December contracts, we've bounced, right? Bounced one time over here. We bounce another time, second time, third time, right? Fourth time we bounce. So this was a key level that the market has basically found a lower balance range off of. Buyers have been present every time that we've tested it, and we've rallied off of that level multiple amount of times. So with this in mind, then if this structure breaks, that's going to have a continuous sell-off because now we have structure that has been broken in the market with the sellers being present from CPI and the Fed meeting, as I've been explaining so far in this video. So now where my 3981, 3975 level came from was the consolidation from the day prior to the CPI data, where we essentially consolidated, buyers found value, accepted value at higher prices, and this is where 3981 came from, 3975. If we broke below this green box, maintaining below 4071, we are going to see a sell-off into this lower green box, and if we break this lower green box, we're going to see a sell-off sub 3900. Those are my levels, and this is how I look to play the market. It's all about coming up with levels and creating context off of those levels. Now, this is where the fun begins. This is the intraday commentary tab. This is where I update my thoughts throughout the day as the market is developing in real time. Again, no hindsight trading here. 8 minutes before the market opened up, I said, let's see if 3981 to 3994 could act as resistance now that we are below. If we can rally into 3981, 3994, fail there and move back lower, break 75. Once we are above that and break below, I become interested in playing the market short. Now, why I kind of tweaked that a little bit was because before we opened up, we broke below that level we were watching in the pre-market plan. So I can't just get short automatically because we're below a level. I need to use more clues than that. That's why I wanted to see that as the market opened up, if we can reject 3981 to 3994, and break below 3975, then I'm interested in playing the market short. Now, why is that? The market came up here, failed. The market came up 10 minutes before the market opened up and failed. It looks identical to this structure right here. We see the same structure right here, and this was the first basis to my entry short. The second basis was we rejected 3981, broke out below it, came back up, we broke and retested it, and failed. The third piece of analysis that made me enter this trade was the market had very strong at offer trades in the first 2 minutes. And then as soon as we came into 3981, that buying kind of disappeared. And the book kind of flipped. Now, where we saw market aggressive buyers, which are these green large bubbles, All of a sudden, look what happens at 9:32, 2 minutes into the market open up. Now we don't really see a lot of at offer trades, and the market has selling pressure now starting to increase. And as soon as we broke the low of directly where we opened and that buying initiated is where I got the market short 3976 right here when those aggressive selling prints came through. And the best part about this trade was when I got short right here when the market looked like this, my stop loss was 10 points away. So I was really risking 10 points to make about 35 points. It was about a 3.5 to 1 risk to reward. And really the last piece of information that caused me to take this trade was VIX. I don't use VIX very often, only when it's at very important inflection points, but we had demand at 20.5. I said this is key. A bounce off of this demand zone means upside prices on ES are going to be harder to achieve, and it's going to provide more conviction for a bearish setup on ES and NQ. If this demand zone bounces, it provides a solid area for the market to continue to sell off on the overall market. Well, guess what happened? Look at the low, 20.5. The market hit it, and we got that increasing rally off of that demand zone. When VIX is moving up, I'm not going to say all the time, but it gives more conviction on a bearish setup on the S&P 500. So now what we see is lower lows across the board, very, very bearish action. The white X was the entry, and my target was this 3954 demand zone. We were putting in lower lows, we were putting in lower highs, and the tape was very, very weak. In the Discord, I said the target is here at 3954. I don't see bulls having an advantage. In fact, more downside. The move has just started here. The next level of interest is 3937. And I said I have not scaled out yet. I'm going to look to exit 50% of my position into any signs of short-term buying on the tape. The tape was extremely heavy. Sellers were very, very strong. And this is something you want to see if you're playing a bearish move. It was something that I can't define what I saw other than what I'm explaining right now. It's more of a feel aspect. But in my opinion, I said there's not a lot of support. And this is just the beginning of the move, in my opinion, as what I saw on the tape. Now, what I saw on the tape was if we were to look at every single time the market tried to move up, there were a lot of trades at the offer, meaning there were a lot of aggressive market buy orders coming into the market, yet the market was not moving any higher. So how we can view this is maybe there was a large passive seller absorbing all the large aggressive market buy orders coming into the market, or they were just sellers looking to cover, and the market cannot rally on a short covering rally. The market could only rally and sustain if new buying gets factored into the market. So if we see a lot of at offer trades like this, but the market is not moving up, it's kind of a red flag for potential more upside. So this is kind of what I meant by that the tape is very, very heavy, along with VIX, along with the intraday chart, and everything that I've been explaining. And then we get that very, very large sell-off. Just look at the selling coming in. I mean, this is something you really want to see. Look at all that pressure coming through at our 3954 level. And then I just wait for some sign of life. And at this point, the market's down 40 points from my entry. We break below 3937. And as soon as we break below this level and tag it, I scale out 50% of my position just because we're up 40 points from the high with absolutely no relief from buyers at all. Now, a few minutes after I get out 50% of my position, I said the longer term analysis aligns with more downside, meaning everything that I've been explaining so far in this video. However, short term analysis aligns with some covering at 3937. So I said expect a short term relief bounce. I'm still holding some shorts and I'm positioned for it. I have high conviction in the earlier analysis, and I expect the current structure to break and test what's out there below. Remember what I said earlier. This current structure is this demand zone that we've bounced off of multiple other times. We're currently testing it. But now we're testing this level and we're failing to find buyers. We're just getting a ton of shorts covering. If we were to look back on the tape, again, a lot of more aggressive market buy orders. And yeah, at some point, this did look like we were going to reverse. However, we were below major short-term levels, and the market cannot rally or sustain on short covering alone. It needs to have new buying. I didn't really see any true new buying or new demand, is how I look for it, form in the market. And we actually rejected 3950, which is where this heavy passive seller was earlier in the day, rejected that level perfectly, and began to sell off even further from that. So now I'm still in this short position. I'm telling everybody to have high conviction, trust your levels. And I said we have the juice to see sub 3,800. I don't think it could happen, but my next target is going to be 3,915, and then below 3,915 comes 3,870. I was warning everybody that if anybody was looking to take the market long, in my opinion, again, I don't want to tell anybody the right or wrong thing to do, but playing long with such weakness and such selling market context, playing long and trying to catch a falling knife is just such a lower quality setup. And the amount of people that I saved from taking the market long today was awesome, because a lot of people would have forced a long setup trying to call a bottom. And there's no reason to be a hero in this market if we're aggressively selling off. We broke the low, and 3908 had a decent amount of volume. I waited for the market to come up. I covered, again, 25% of my position on this move down. Now at this point, we're 60 points higher from my entry, original entry. Actually, it was like 65 points from my original entry. So awesome trade at this point. And now we broke below that structure. I am expecting more downside at this point. Every single time the market rallied, intraday, we failed. There's still more juice to the lemon that's got to get squeezed, in my honest opinion. And I held a few contracts remaining, anticipating we were going to break below 3908. Now, in hindsight, this was the wrong move, and I maybe should have gotten all out at here, reviewing this chart after the fact. But this was probably my only mistake today, and it was a good mistake. But we had VIX 23.15 supply. It was key. And I said ES is going to find a relief bounce here at 3915, 3905, while VIX is hitting this supply zone. So essentially, we rallied off that demand from the pre-market plan, and we hit the supply zone perfectly. I mean, to the exact tick. 2315 was high, and the supply zone started at 2315. This was the same zone that the market has rejected pretty much all week. So at that moment, I probably should have gotten all out of my position here and been cautious to more downside on the S&P, but I held it expecting more downside. We didn't get it, and I stopped out on the way up at 3933 just when we broke the previous high, because this now formulated a higher high on an intraday time frame, the first of the day. And that was the best move of the day. So maybe I could have gotten all out over here at 3911, and that would have been the best exit because of VIX hitting supply, but VIX moved from demand into supply perfectly, and the S&P hit our levels. We executed flawlessly, and today was definitely one of the days for the books. It was a setup we've been watching for weeks, and to capitalize on it and execute the way we did was a very, very good feeling. And just trust your levels, have conviction in your analysis, and believe in yourself. Don't be scared of a past mistake you made or some fear of the future event. Maybe you taking a losing trade. It's all irrelevant. Focus on what's in front of you right now. The best moment is the present moment. It's all we got. That's why they call it the present. So focus on the market right in front of your face. It's all we got, and understand price and volume itself. It's the best leading indicator in the world. But I'm going to end the video on that note. I hope you got something out of this video. It's probably one of my most educational video recaps. If you could drop a like on this, I would really, really appreciate that. Comment any questions, and check out the links in the description below. Every time I post one of these videos, I get a question about how to join the Discord. The Discord is a supplement to the course. Majority of the education is in the course, and the Discord is included for free to supplement that education. But I'm going to end the video on that note. Peace out.